Hello, everyone, and welcome to eToro Hangout. This is Nimi Howard, joined today by my colleague Yana. Yana, how are you today?
Hi guys, everything's okay. It's so nice to be with you guys and to meet Manny, our analyst.
Hi
Um,
guys,
Hello, Mandeep. How are you doing today?
I'm fine, thank you, Nimi. How's it going?
Everything is okay. I'm very excited for this today. Just before we get started, if I may just take a moment to sum things up,
hmm
Yana was very much involved in this project,
hmm
introducing Mandeep to eToro. So first of all, thank you so much, Yana, for all your hard work and support in this.
No problem at all. Thank you very much for appreciating this. I could simply say that I found Manny. I actually met Manny through my daily job. I'm calling my clients and trying to help them out. And Manny was very serious from the beginning. His goal is to teach other clients, and this is the best way for us to actually help him out. People can see a face, can get to trust him, to know him, and we are hanging out. So it's
Great.
fun.
Great.
Sure.
So just real quick before we officially get started, for those who are first joining us today, Mandeep is a professional trader from the UK. He's been doing this for many years. He's been so kind to take the time to share his knowledge, his wisdom, his experience in the market. So without further ado, I would like to welcome the star of the day, the man of the show, Mr. Mandeep Athwal.
Cheers, Nimi. Thank you very much. Okay, guys, as we know, today is lesson one. So, without further ado, I am going to share my screen and we are going to start to learn to trade. Okay, Nimi, can you just confirm you can see my screen?
Absolutely. I'm loving it already. Trading made easy.
Perfect. That's what we're going to do. We're going to make trading easy. Okay, guys. The title "Trading Made Easy." The reason we titled it "Trading Made Easy" because trading is simple, but it's not easy. So what we're going to do is we're going to make it easy for you guys to trade. Okay, today is lesson one: Forex markets behind the scenes. So today we are going to talk about what are spot forex markets, how they work, who are the players, what makes the markets move, what is needed to be a successful trader. I'm sure that's the reason you guys are all here to learn that. The pros and cons of trading. So, in other words, why would we want to trade forex? And finally, we will talk about basic chart knowledge. I will teach you what you need to look out for when you're looking at a forex chart. Okay, this is our disclaimer. Please read through it because I do not want any claims of any kind to be put against myself or eToro because we are here for educational purposes only and we would only like to teach you, not tell you when to trade or what to trade. Okay, let's start. So, what is Forex trading? Well, Forex trading is simply a method used for buying and selling currencies. It's like any other business. Just the way you go into a shop, the shopkeeper would buy something from the wholesaler and he would sell it on to you. It's the same process used in Forex. What we do, we buy a currency and then we sell it. If we are buying something, we would want the price to go up so we can make a profit. If we are selling something, we want it to go down so we can make a profit. One thing that confuses everyone is that how can you sell something when you don't actually own it? Well, guys, if you just reverse the method, if you sell something first and then buy it back, you have actually bought and sold, so the process is complete. Right. So, what are the ways that you can actually trade currencies? Well, there are normal method, which is you can go into a exchange bureau and get your money exchanged that way, or you can go into a bank and exchange your money that way. And finally, we have now forex trading, which is through brokers and obviously other institutions, which we will talk about in a bit. And that is used to trade forex or foreign exchange in the current climate. So why would you want to trade forex? Well, The benefits of trading Forex, first of all, it's a high leverage product. I want to just touch on this, but I'll bring Nimi into this to explain what high leverage actually means. Nimi, do you want to just touch on what leverage actually means and how you guys offer it to your clients?
Sure, absolutely. Yes, here at eToro, we do offer leverage. Leverage is the concept of actually being able to trade with less money in your account, higher volumes. For example, make it very simple, we offer as low as leveraging as low as 2, leveraging as high as 400, 1 to 2, 1 to 400. What does this mean? It means that, for example, you leverage 400, which is high leverage. It will allow you to buy or sell, let's say, $10,000 with only $25 in your account. So that is pretty much the concept of using leverage.
Perfect. Okay, guys. As Nimi just explained, leverage is a golden thing for you to use because you can have small amount of money in your account, but you can actually hold and trade a larger amount of currency on the market. So, for example, you could have $1,000 in your account. When I say in your account, I'm talking about a trading account. And you could actually control, say, $25,000 worth of currency. Okay, so that's one of the benefits. The second benefit is this market is a volatile marketplace. When I say volatile, what I mean is that the market actually moves quicker than majority of other markets. Now, you would think that's pretty a difficult market to get into. But if you think about it in a sense that when you open a position in trading, you don't want to be sitting there for days. You want to be out within seconds or even minutes or, I don't know, split seconds in Forex. So the advantage here is that you can actually enter and get out of a position within split seconds. In other words, you will not need to hold on to any position for longer than you want to. However, obviously, we do have high volatility times and low volatility times. We will talk about that later in the course, but for now, just be aware that volatility is good for us. Okay, thirdly, this is a $3 trillion market. Now, $3 trillion was, I think that was last year, so it's probably more than that now. So every day, $3 trillion are traded through Forex. Now, this doesn't just include spot Forex, this does include futures and commodities, etc. Sorry, not commodities, for futures and CFDs. Now, the reason I say the $3 trillion market is very important because the size of the market actually suggests that, you know, there is less chance of manipulation in this market. The reason being is when you have a market which is controlled by countries rather than companies, you tend to have less manipulation in the sense that individuals won't have an impact on the currency or the market itself. Whereas in the stock market, a company shares might be affected by, say, for example, the director or, you know, the accounts team, etc. But whereas the currencies are mainly affected by national or international events. And then we're moving on to size. You can trade from small as 10 cents all the way to millions. I am sure if you want to trade millions, I would recommend that you start off with 10 cents, learn what you're doing, and then move on to your millions. But Nimi, do you want to just explain how your clients can trade? What is the smallest position they can open?
Sure, absolutely. Here at eToro, you can actually trade with as little as $10, minimum of 1,000 units up to 2 million units. But as Mandy just said, for those who are just beginning, jumping right in is quite a dangerous thing to do. I think you need to test the waters first. As I mentioned, $10 as minimum is $10, 10 cents per pip.
Okay, perfect. So then we're moving on to accessibility. Well, unlike the stock exchange, which opens in, well, I'm talking about the FTSE here, which opens at 8 o'clock in the morning and closes at 4:30 in the afternoon, the Forex market is 24-hour market, so it opens on Sunday night and it closes on Friday night. Please note, I'm talking about GMT times there. Now, This market might be 24 hours, but guys, by no means you should be trading 24 hours a day. We will obviously discuss the times when you should be trading the market when the volatility is in your favor, and also how to actually put your business plan together so that you're treating it like a business and not like a game that you just turn up and just play whenever you want to. Do you just want to tell your clients what are your trading times when your dealing desk is open?
Of course, Manny, I will just need you to speak up a little bit. Basically, our clients can actually trade from Monday to Friday. The market closes Friday night, 9 o'clock GMT, so everyone should be careful and should watch their times and make sure they are on the on the GMT. And we have the market open on Sunday evening.
Yeah.
23 local time. That will be again 9 p.m. GMT.
Okay, guys. So there you go. You have it. So you can start trading from Sunday night all the way to Friday. However,
actually, just if I may step in, and I'm so sorry, don't mean to correct you, but it's actually 22:05 that we have the 5 extra minutes there. So just so you're not thinking that anything is wrong, we do have that 5 extra minutes.
Okay, guys. Well, one of the things we're going to teach you is not to trade the markets as soon as they open anyway, so you won't need to worry about the 5 minutes. But thank you, Nimi. Thank you for correcting that. Okay, so guys, then we moved on to that you can actually sell this market short. Unlike some countries, they don't allow you to short certain stocks on their stock market. Currencies, you can sell or you can buy. It does not make a difference, so we make money both ways. Right, let's get into cons. Just like any other business, there is a downside to trading Forex as well. People do overlook it, but if you do want to trade Forex, then we have to look at the potential risks. Now, Nimi talked about leverage, how wonderful it is and how it can work in your favor and how you can use it to your advantage. However, guys, leverage is a dangerous thing too if used wrong, so it's a double-edged sword. What you need to be careful of is that leverage can make you lose more money than what you have in your account, although your broker should actually take you out before you get to that position, but there is a potential that you could end up like that. But when we are going through this course, what we're going to learn is how not to use all your leverage and how to manage your risk. Now, 95% of people actually never make it in Forex trading. Reason being, because I always put it down to that Forex is a 70% psychological game. Now, if you don't have a plan and you don't know what your mistakes are and you don't know how to correct them, then you will fall into the 95% of the people. But after finishing this course, you should be moving into the 5%, and that's what our aim is. Now, Forex is an unregulated activity, although the brokers are usually regulated by local authorities. What I mean by unregulated, it's not like the stock exchange, which is regulated. It is a interbank market, which I will explain in a bit. But for eToro clients, I just want you to have peace of mind, and I will ask Nimi to just explain who their local authority, regulator is. Nimi, who is your local regulator, please?
Sure. As Mandy said, we are regulated. eToro's brokering service are provided by eToro Europe Ltd. And we are regulated by CySEC, the Cypriot Securities and Exchange Commission. So those who have any concerns, please do not be concerned, because we are regulated and monitored on a regular basis.
There you guys, there you have it. Okay, so there's nothing to worry about at all. Now we have the final point about brokers. Now you don't need to worry about reputable brokers like eToro, because these guys, they have their funds in segregated accounts, and also they are regulated by the local authorities. However, you need to be worried about brokers who do not have segregated accounts. What I mean by segregated accounts is that, say, for example, if the broker went bankrupt, you will lose your money. However, wherever you have a segregated account with a broker, if the broker did go bankrupt, your funds will still be safe and the money will be transferred back into your personal banking account. Okay. So it's exciting, but where does it happen? Well, unlike the New York Stock Exchange or London Stock Exchange, we don't have a central exchange. So, but there must be a place where everyone trades. The place or the playing field is called the interbank market. On the interbank, the banks either deal directly with each other or deal through platforms, and it is an unregulated market, like I just explained. Now, can you hear me properly now?
Sorry?
Can you hear me okay?
Yeah, fine. You can speak up a little bit.
Okay, perfect. Okay, guys. So we have the interbank where everything takes place. So who plays on the interbank? Well, we have the banks. So you would have banks like Barclays, HSBC, RBS, Citibank. So these guys would go on the interbank and they would exchange currencies with each other. They would set their prices for each other and they will have a bid and offer price. So they could bid one price and the other one could offer another price, and that's how they do their business. And then we have hedge funds who also get involved on the same level. And then we have Forex brokers who would obviously go there to hedge their clients' accounts, or they normally trade their own funds. And then we have companies. Now, people often ask me, why would companies want to trade Forex? Well, one of the main reasons is that these days you have international global companies who, say, for example, a company is based in the United States and they have a subsidiary in Australia. So they're getting paid in Australian dollars, but they need to bring the money back. Now, if their turnover is in millions, it wouldn't make sense for them to go to the bank. Instead, it would make sense for them to go to the place where the banks actually trade. So what they do, they go onto the interbank and they trade their own currencies to convert it back to the base currency to bring it back home. And then finally is us, the traders. Now, when I say the traders, it could be anyone who's got $100 in their account all the way into millions. One of the ways we can get involved in this is through our brokers. Now, Nimi, can you just explain what is the minimum amount of funds required for your clients to open an account with eToro?
Of course, you can enter into eToro account with as little as $50, and so you do not have to have a lot of funds to start. But with that being said, Mandeep, if I may just make a comment on the last slide there, if you can just please move it to the last slide there. As a beginner, I'm looking at the slide and I'm thinking to myself, wow, how can I compete against these big entities? I mean, I don't have that much money to begin with. What chances do I have of being successful?
Okay, guys, trading, like I explained, it's not about the amount of money you have in your trading account. Eventually it will, but when you're starting out, you want to learn to trade rather than how much you trade. Now, an institution like, say, for example, we have a Citibank, right? Their trader might be trading, for example, I don't know, 50 million, and you might be trading 50 or $5,000 in your account. Now, say for example, euro-dollar is trending up. You have a strategy where it's telling you that you should buy euro-dollar, and you bought euro-dollar, and euro-dollar is now going up. Yeah. Their trader on the Citibank has sold euro-dollar. Now, the market doesn't care how big he is and how small you are. Market cares the way the market's moving. So we don't want to worry about what other people are doing. The only thing we want to worry about is what the market is doing. Now, the market will move with the major players. So wherever there are more people, so if more people are going up, market's going to go up. So more people are going down, market's going to go down. So all we want to do is stay with the market. We don't need to worry about how much money someone else has got in their account. Is that clear, Nimi?
Yes. Thank you so much. Makes it much clearer.
Okay, I have a question. Can I?
Yeah, sure. Go ahead.
Thank you, Manny. There was a comment done by you earlier that basically in this business, 70% of my strategy, of our every single trader's strategy should be psychological. I really liked what you said. Can you explain briefly?
Yeah, sure. Sorry, I didn't say strategy. What I meant was that trading itself is a 70% business, which is played by mental, obviously, mental game. And
Okay.
what you need to take into account is that people's emotion is what drives the
Okay.
market. So you might have look at the same chart as me, you might see the same thing as me, but you might think something different.
Absolutely.
And the decision to buy or sell is mental, right?
That,
So yeah,
that's where
when you
that's
look at
where
the
Nimi
chart,
helps us.
yeah, exactly. So what we're going to do is we're going to take out the mental aspect of it. So we're going to take
Okay.
emotions out of the game and have a plan. So when we look at the charts, we know what we're looking for rather than your mind telling you what to do.
Understood. Thank you,
Okay?
Matt.
No
Thank
problem. Okay, guys, let's talk about brokers. So we have two different types of brokers. We have dealing desk brokers and we have a broker with no dealing desk. Now, dealing desk brokers are usually the ones who make the market. I will go into that in a second. And no dealing desk brokers are brokers with ECN, which stands for Electronic Communication Network or Exchange Communication Network. And we have STP brokers. Now, ECM broker, what they do is they would go onto the interbank with your trade directly, and they would put a spread in the price, which is then used as a profit. So what an ECN broker does is actually acts as an agent to the interbank. Now, the two ways they make money is either they charge a spread or they charge a commission, right? So one of the best things about an ECN broker or STP broker is that whether you are losing money or you're making money, they don't actually benefit from it. The way they benefit is when you trade, and that is the kind of broker you want to be with. And then we have dealing brokers. Now, dealing brokers are firms like spread betting firms or market makers. It's more of a gambling environment. So you do want to be staying away from spread betting firms because one of the reasons is that if you are selling something and the volatility is very low, if they are making the market and you are in a position which will benefit them, they might spike the market against you and take you out. I'm not saying they do this, but there is a possibility. You don't want to be against someone who is in control of the market. You just want to go to someone who will put you with the buyer or the seller on the other side. Okay, so how does the Forex market actually work? Well, you have your trader. Well, unlike this guy, you don't want to be like him, but you have your traders, and then what you do, you place your trade through electronic trading platforms, so someone like eToro or any other firm. And then what happens is that that trade would then be moved either if they have a dealing desk down to their dealing desk. If they don't have a dealing desk, it will go onto the interbank directly. Now, the difference is that when you have a dealing desk, what these guys do is that they manage their risk. So any losing trades that you have, it will benefit the broker. And any winning trades that you have, they will offset it at the interbank. The ECM brokers or the STP brokers, what they do is they take your trade directly to the interbank. So they would say, for example, if you were selling 10 lots of euro dollar, they would go to someone like any bank who's looking to buy or taking the other side of your trade on the interbank, and they would just get you a price from that, add a small spread, and make a little profit out of it. Okay. So how do and why do prices move? Well, they simply move because we make it move. Now, when I say we, I don't mean you and me, I mean the players on the interbank. Now, these guys obviously trade in millions. So what the last thing you want to be doing is trying to think that you can make the market move. I have heard a lot of people say this to me, oh, I was on the market 11 o'clock at night and I opened a position with $50 a pip and the market moved. Now, that's not the reason why the market moves. The market moves because there's an event happening somewhere else or because an institution's order just being filled. Nimi, are you still with me? Just so obviously I know that everyone's understanding what I'm saying. And Yana, are you guys following me correctly?
Of course.
Loud and clear.
Perfect. Okay. So guys, then we need to just discuss why do the markets actually move? Well, they move because supply and demand. Now, I will go into supply and demand obviously when we talk about charts, and I think that's lesson 2. But let me just touch on supply and demand. What supply and demand is, for example, anything in your personal life at home, when you go to buy something, you will often notice if a supermarket or anywhere in the country there is too much supply of something, the prices will fall. If there is too much demand of something, prices will rise. For example, if we look at anything, say for example, if we look at now Christmas, if we had a computer console and there wasn't enough, if there wasn't enough supply. So for example, if there was more demand but there wasn't enough supply on the market, prices would have risen for that. If there was too much supply, so if the wholesaler had too much of it left over, he will reduce the price to try and get rid of it. So the reason prices move is when we have too much supply, prices will fall. When we have too much demand, prices will rise. Iona, are you with me on that one?
Of course.
Okay,
All
perfect.
ears.
Okay, cool. Okay, then moving on to central banks. So what the role central banks play in moving the markets is that usually it's when they release interest rates or when they release any kind of data regarding that country's currency. So for example, if their interest rates go up or down in the UK, the GBP will be affected. And then we have news and data. Now, news and data comes out almost every day. There's different types of news. Now, there is news that actually affect the currency quite heavily, and there's news that affects the currency lightly. So in other words, it doesn't really make the market move. There are websites where you can actually go and view the news. Now, I won't mention any here, but I'm sure you guys can put it into your search box.
Mandeep, while we are on that subject, Yana, if you don't mind, would you be able to show our viewers where you can actually access our economic calendar and they can view these events in news that Mandeep just presented to us? Would you be able to do that for us?
Absolutely. Thank you very much for this. The presentation was very clear. I mean, many talks about everything, and we covered a lot. Let's have allow me to briefly share with you my screen.
Okay.
And just a second, please. Okay, we are going back to the Hangout. Hold on with me, guys, for 1 second.
And if you guys, while Yana is doing that, if you guys notice in the background there, our color is green, color of money. So that's what we're planning on doing here, making some money.
Absolutely. Basically, everything I work on a daily basis with clients that most of them never seen a platform before. So the first thing that I have to teach them is the interface, how to buy, how to sell, how to basically work with this, because this is the main source of their business. Like Manny said, we need to check the market every day. So I'm actually showing my clients to find the economic calendar at on the top tab, more trading tools.
So Yana, you're here on the Web Trader. Is this where you're at? You're on the Web Trader right now?
Absolutely.
Okay.
I'm going to the tab next to the logo, Open Book More.
Okay.
I click on More and I choose the first option, which will be Trading Tools. I basically have a new tab with much more tools, but the most important for me as a client will be the economic events calendar. And I start browsing by date, time,
now, Yana, I'm sorry to interrupt you, but we are currently not seeing the economic calendar. We are still on the eToro Web Trader.
No problem. Just a second. Then I'll try one more time to. Here we are. What about now?
Beautiful. Okay, so this is the eToro economic calendar.
That's correct. That's correct. As I mentioned before, we go on the web trader top tab. We have an option called more, and the first sub option will be trading tools, and that's where actually I am at my economic events calendar, checking by date, checking the currencies, checking and basically opening. I'm just having a look at 430 GBP mortgage approvals,
Yeah.
money being lended.
Iona, do you mind just highlighting the impact icons, showing how much impact the news will have on the currency pair?
Absolutely.
Yeah.
I'm having 430 GBP, a medium to high impact. Okay.
Okay, guys, can I just stop you there for 1 minute? Okay,
Of
guys,
course.
the reason I asked Iona to highlight that is because when I said that the news comes out nearly literally every hour, you don't want to be looking at the news all day long. What you want to be doing is looking at the news which is going to have medium to high impact. So the low impact, this doesn't really impact the currency that much. It's usually medium to high, and those are the ones I'm going to teach you to stay away from, obviously, when trading. So, okay, Iona, take it away.
Absolutely. Thank you, guys. Thank you.
Okay, okay, guys, let's get back. So we were at the news, right? Let me just share my screen again. Okay,
Yeah.
so we talked about supply and demand. So we talked about central banks and news, and then we obviously have data. Data would be anything. For example, we have non-farm payrolls, etc., and the number of jobs and housing, etc. So anything that affects the currency of the country would be data that you need to take into account when trading Forex. Now we have national and international events. These to me are the most important ones. National would be anything like elections and any kind of, these days we have security issues, etc. International events will be like tsunami disasters or the weather. Whatever kind of affects the country's economy would take an impact on the currency of the country. Okay, so we have a professional trader and we have a novice trader. Now, let's compare the difference in the two. The reason I want to compare the differences is because if you want to be a professional trader, you must first establish what novice traders do, and then you should learn how to get rid of those problems or those habits and then move on to a professional trader. So the first thing you want to do is probably make a list of the things that you do right and the things that you do wrong, because the ones you do wrong, those are the ones you want to get rid of. Now, I always say is that you can't change anything in life unless you know what you're looking to change. And you can't look to change anything if you don't know what you've done wrong. So what you need to do is write down what you've done wrong first if you've already been trading and it's going wrong. Or if you're looking to trade, you need to look in your personal life, what your weaknesses are and what your strengths are. Okay, let's look at novice trader. Well, novice trader would be anyone who knows the rules but decides not to follow them. Now, I know hundreds of people who write their rules down almost every week, but comes Monday, they don't want to follow them. These guys are known as novice, and that's the reason they lose money in the market. Very, very simple, but happens over and over and over again. And I'm sure, Nimi, in your trading career, you've probably seen it happen. Guys, before Nimi actually goes into, I just want to emphasize the point. I've been in this situation myself. When I first started out trading, I wrote my rules down every week, but I did not follow them. Until I started following them, that's when my trading career actually took off. Nimi, I'm sure you can share the same experiences.
Mandip, absolutely. I myself, when I first started this, I thought I knew everything that I needed to know. I went in and blew my account within a very short period of time. The only difference is I learned from my mistake, and now what I do know in my experience, I do apply. It's unfortunate that when I work with some of my clients, I share with them my experience, my knowledge, wanting them to profit, but unfortunately sometimes they choose to go their own way, and we see a lot of people, making really nice profits, short period of time, and they think this is easy. So yes, I've been in their shoes. But you have to learn from your mistakes.
Okay. Okay, guys, so you can see that you're not the only ones. We all been there, and the difference is that we've learned from our mistakes. The reason we learned from our mistakes is we realized we were making the mistakes. So the first thing you need to do is learn where you're going wrong, write it down, then look to change it. Now, a professional trader on the flip side would know his rules and will follow them. Now, I can just give you an example of my trading plan. I have my trading plan in front of me every day. My trading plan is written in my head. However, I still have it on paper because I don't want my emotions to play any part. I look at my trading plan every day. I only do what that trading plan tells me to do. So I'll follow my rules thoroughly in that sense. Then we have the novice trader would trade his or her emotions. Now, me and Iona talked about this earlier. What I mean by emotions is that, for example, if the market is trending up, the novice trader won't look to buy. He'll constantly follow his or her emotion and will look to sell the market without any kind of reason. Now, emotions is very, very hard to control when you have money on the line. One of the best ways you're going to be able to control it is if you have a plan. So I know I keep talking about this, but if you don't have a plan, you are planning to fail. But if you do want to make money in this market, then you definitely need to have a trading plan written down. And eventually, when you trade that plan for a couple of months, it will just be become like a robot in you, and that you will only do what the plan is telling you to do. So your emotion will automatically start going out of the game. Now, a professional trader on the side obviously has a trade plan and takes emotions out of the game. In other words, he doesn't care what he's thinking. He's looking at the markets. He's looking at his plan. So if his plan is that, my strategy telling me to buy when this signal is active, he will buy. When that signal is active to sell, he will sell. Emotions do not come into play. Now, novice trader lacks discipline. Very, very big, because I notice people, they're going to the market once, twice a week. They don't know when they should be going to the market. They don't have any kind of discipline. They will have no plan. They will over leverage their account, and they will do all kinds of silly things. They will take, some flying rumor and buy the currency or sell the currency, and then they will lose money. Whereas a professional trader is like a disciplined predator, not a flapping prey. So he sits on the side, waits for his trade to set up, and then he takes the trade. Okay, novice trader sees the trading as an easy get-rich scheme. Now, it's not just the novice trader who sees this. I think whole of the world who wants to come into trading kind of sees trading as an easy get-rich scheme. I don't know why people think that you're going to become a millionaire overnight from trading. To me, trading is like a business, and any business takes time to build and also for you to learn the skills in that business. But a business is like a baby. So if you look after your baby, it will grow into a nice adult one day. So look after your trading business, and one day it will turn out to be, probably into millions. I know guys who started out with the trading with about $5,000 in the trading account. Now they've got like over 5-6 million in their account. Guys, it has been built over say years, not just overnight. So don't take trading as an easy way for you to make millions. Even if you do have large sum of money to invest, do invest wisely and also learn what you're supposed to be doing rather than just jumping in to try and make money here and there. One of the problems we often face is that in life, whenever we make money and we don't know how we made it, that is more dangerous than anything else. Because if you made money rather than lost money first time, you won't go back to learn anything because you'll think you know exactly what you're doing. But that's when all of the problem starts occurring. So what you want to do is learn what you're doing or what you should be doing, and then obviously you can write a business plan and move forward from there.
Mandy, if I might just jump in here,
Okay.
what you mentioned about the business plan. So what I tend to tell my clients is that they need to look at trading Forex or investing not as a race, but as a marathon. Would you agree with me?
I definitely agree with you, mate. Because it's at the end of the day, like Nimi said, it's not a it's not a race. So when you run a marathon, you have to put your training in slowly, and you run at a slower pace. Now trading is similar kind of thing in the sense that you do start off slow, but one day you will run fast. And when I say run fast, I mean, for example, you could start off as a swing trader who takes, one or two trades a week, and then you could become an intraday trader who takes, a couple of trades a day and makes his money. But for example, I met a guy last week, and he said to me, I want to go into the market and I want to make £2,000 a day. And I said to him, how much money do you have to trade? And he said to me, 50,000. And I said to him, I tell you what, take a zero off that and put that in your trading account. And he said to me, why? And I said, the reason being, I don't want you to lose 50,000. I just want you to lose 5,000. Because I haven't met one single trader who can't say to me that when they first started out trading, then you lose money. And when you lose money, it mentally does knock you about. And I'm sure Iona and Nimi would agree with me on that one.
We agree. I agree. I definitely agree.
Yeah.
I wanted to say something actually. I want also my clients not to be afraid anymore. This is not a race. This is an investment, long term. They start with something reasonable, and patience is your best friend. Hang in there. It comes. It comes.
Exactly.
Nimi, agree?
I agree. Patience, consistency. Definitely. I agree with both you, Yana, and Mandy.
Exactly, guys. Remember this bit here. Disciplined predator, not a flapping prey. You want to be a disciplined predator. You want to be sitting on the side. You don't want to be flapping around for me or me to catch you.
Of course.
Okay, guys. Right. So what is needed to be a successful trader? Well, a successful trader knows the rules, first of all. So you need to have your set of rules. One of the first rules and the most important and the most crucial one is that you can't make the market move. So don't ever try it. I heard all kinds of stories that they think they move the market, but guys, none of us can make the market move. Institutions and supply and demand, and also the other things like international events, those are the kind of things that make the market move. Our $10, $100, $200 are not going to make the market move. So in order to learn how to be successful, we need to have a certain set of rules, and also we need to be able to get on the road to be successful. Now, to get on the road to be successful, we must know three things: knowledge, application, consistency.
Yeah.
So when we're talking about knowledge, what I mean by knowledge is that we need to learn to trade, have a trade plan, and have a set of rules. I don't mind what your rules are, whether it is that you can only trade once a day, once a week, once a month. Whatever your rules are, the main important thing about it is write your rules down. Don't change your rules. Don't go against your rules. And learn to trade. Come here every week. Learn bit by bit. And that's how you're going to move on. Secondly, application. There is no point having a wonderful trade plan or set of rules that you follow every day. Now, you would only follow them and you would only learn to trade because you want to apply your rules and you want to trade your plan. So application is very important because, like I said before, you seem to change your emotions when money is on the line. You might have a wonderful set of rules, but those might go out the window as soon as you start losing some money. So what you need to do is apply your rules and your trade plan to the market. So what I mean by apply is basically opening and closing trades. So you need to start off small, open a small trade. I'm sure Nimi, Iona, these guys will help you how to open and close trades. Am I right, Nimi? You help your clients how to open and close trades?
Absolutely. We all the time. We can't trade on their behalf, but we definitely assist them.
Yeah, exactly.
And I'm sure Yana can vouch for that as well.
Exactly.
Absolutely. Do we need to show our clients how to open some positions?
Okay, we are going to do that in our second lesson when we actually start to go into trade. So today we are running short of time, so let's just get this through today, and then next week we will run through the platform. Okay, so we're talking about application. So you want to be able to apply your set of rules and your trade plan to the markets. So every day you would come with your trade plan, or once a week, or whenever you are going to trade, and you will do what your plan is telling you to do, and you will follow your rules. And then we have consistency. What I mean by consistency is that, guys, you need to write down, journal what you're doing in your trading. It's like anything in life. You can't change something that you haven't noticed. So in order for you to notice your mistakes or where you're going right or where you're going wrong, is that you need to have a journal. A trading journal is very, very, very important, especially when you're starting out. Reason being is that you want to learn from your mistakes. Now, you're only going to learn from your mistakes if you have written down your mistakes. I met a guy last week and he said to me, my trading journal is in my head. And I said to him, can you tell me how many trades you took last week? And he said to me, probably 20 plus. I said, do you know what your trade number 8 was? And he didn't have a clue. Now, someone with a trading journal could actually go back and have a look where his mistakes are. And I'm sure, Nimi, we discussed this before, didn't we, off the record, that, you know, a trading journal is one of the main reasons people never succeed, is because they don't know where they're going wrong.
Yes, I agree with that. I think that too many people, as you mentioned, say that they have everything in their head. You know, if when I first started, I was that guy, and I couldn't tell you what I traded 2 days before. Now I'm the guy that does keep a journal, and I can tell you what I did 2 hours ago, what I did 2 months ago.
Exactly.
And those who don't keep a journal, the majority, we do see that they fail in this Forex world.
Yeah, exactly. And guys, remember that, you know, the line I keep repeating, you can't change something if you don't know it. So you can't change something that you don't know. In order for you to change something, you need to know it first. The only way you're going to know where you're going wrong or where you're going right is through that journal. So get yourself a trading journal. Write down exactly what you're doing in your trading activity. Now, for me, if you want to know a tip, I have a trading journal for my trading, which tells me every trade I've taken, what price it was took at, when, what time it was taken at, what time I got out, how long I was in the trade for, how much profit I made, how much loss I made, how many pips I made. And also, I have a journal for my emotion, how I felt through that trading activity. The reason being is, if you are thinking about getting out a trade, or you're looking to move your stop loss, you want to be noting that down so that next time you go into it, you know exactly where you're going wrong and you want to correct that. Okay, now starting with charting. Nimi, are we okay for time?
You know, we actually gone a little bit over, so you know, if we could, as far as the charting goes, I believe that we should leave the charting for our next session. Give
Okay.
something for our traders
Perfect.
and our viewers to look forward to.
Okay.
So with that being said, first of all, Mandy, you know, fantastic job, very exciting. I'm very, very excited to see where you take this with us for the next couple of weeks. Are you there, Mandeep?
Yeah, I'm
okay.
still there. Yeah, yes.
Okay. So like I said, well,
Can you see my screen?
yeah. So I'll let you
Yeah, so I just-
summarize it before we end the session.
Okay, perfect. Okay, guys. So today we just learned about what are spot forex markets and how they operate. We learned about the players. I'm sure you guys remember I talked about the interbank, the banks, the hedge funds, and the FX brokers. And then we talked about how to be a successful trader, where we compared novice and professional traders and the ways you can trade the markets and mistakes you want to be looking to eradicate from your trading. Now, also we talked about reasons for trading Forex, so the pros and cons, and we were going to talk about a bit about the charts, but obviously we've run out of time because I've taken too much. So guys, I'm going to leave it with Nimi, and I will speak to you guys next week about trading.
Well, Mandeep, once again, thank you so much for taking the time. Fantastic job, very exciting. Very much looking forward to see where you take us, as I mentioned, in the next couple of weeks. Just so everybody knows, this is going to be a 7-week course. We are going to host this course every Thursday at 12 GMT time. So please join us. Go to our open book pages. We'll have the links posted there. You can actually view it on YouTube. I hope everybody is subscribed to our YouTube page. If not, then you guys can contact us. We can walk you through how to do it. Very simple. So first of all, Mandeep, thank you so much. for your
No
time.
problem. No problem.
It was a pleasure.
Yeah, sorry.
Sure.
Can I just come in for a second? One of the things I wanted to highlight was that, guys, this is for you guys to learn. So if you do have any questions, please feel free to either drop Nimi or Iona email, and they will forward it on to me, or you can drop a question if you're watching on YouTube just underneath the link, or you can, if you are an eToro client, you can actually go onto my profile and leave the question on my profile, and I will write the answer on my profile.
Great, great. Yana, thank you so much for joining us. It was a pleasure to have you with us here. Once again, thank you for introducing this wonderful man to eToro and to having this opportunity to participate. Thank you so much.
Thank you.
It was a pleasure, guys. You have the right approach. The guys, the traders will find you in the open book. Mimi will take care of everything. For sure, you teach me something today that I know who I have to call now when I'm sentimental while I trade.
Okay, perfect.
Well, guys, so we're wrapping it up here. We're going to sign off. So once again, thanks everybody for viewing. Thanks everybody for joining this eToro Hangout training with Mandeep Lesson 1. All right, guys, we're signing off. Take care.
Okay, guys. See you next week. Bye-bye.
Thank you. Bye.